It's the last business day for the week and, of course, the month. It's also the end of the second quarter of the year. Good morning. This is Business Morning. Thank you for joining us. I'm Chimeze Obi Iwago. Well, Nigeria's first diaspora bond has commenced trading on the main market of the London Stock Exchange. Now, this follows the successful raising of $1.5 billion through the country's Eurobond earlier this year. The bond is the first from an African country that is registered with both the United Kingdom Listing Authority and the U.S. Securities and Exchange Commission, and is targeted at retail investors. Interest in the bond was high from retail investors across the globe and was 130% subscribed, raising a total of $300 million. Our proceeds from the 5-year 5.62% bond are expected to be used to fund infrastructure projects in the country. I'm being joined by an investment analyst at AfriInvest Securities, Doyisola Afolabi. Good morning, Doyisola. Thank you very much for joining us.
Thank you for having me.
Yeah, now it's been an eventful half year for the Nigerian equities market and, of course, indeed the general economy. Did you expect the market to be positive, what we saw in this half year?
Okay, yes. As at earlier in January, when we released our outlook for 2017, we projected a bull case for the equities market, but we gave some conditions, right? If the CBN, came out with some certain policies. We talked about the militancy issue as well. So all these things, the FX management, all these things need to be fixed, and then we'll continue to see, we'll start to see an appreciation in the market, which has been done, right? So it really wasn't a surprise for us after the policies were made from the FX management that started in February till 30 any FX window. Looking at 2016, this time 2016, we had a couple of macroeconomic headwinds.
Challenges.
The NPS greeted us Happy New Year with the GDP numbers that came out, which was very depressing. And then in May, we started to see, we saw a decline in oil prices as well. Somewhere in March, we started to see poor corporate earnings, and then it went on to June, which dampened investors' sentiment. We saw market cap for H1 2016 at 9.9 trillion. Although yesterday it was up for H1 2016 was up 3.3%. But then, like I said, we projected a bull case for half year 2017, provided that all these policies were put in place. And then look at where we are. Yesterday is at 23.8%. Market cap it's a thing to smile about. It's something to smile about. Market cap at 11.5%. Looking at the sectors for H1 2016, the banking sector was the loan gainer for H1, and now all sectors are up. The FX management and administration, the militancy issue, relatively stable oil prices, improvements in GDP, inflation, all these things are positive for the economy. Yes, we're not.
All right. Now, talking about the banking sector, now, with a year-to-date return of about, that's 41%, as at June 23, the banking sector has been, just as you mentioned, a clear performer despite the dark clouds, surrounding that sector. Will you now say that the fear for asset quality has been, exaggerated, or is it the fear abating as a result of macroeconomic stability?
Okay, so one thing that we know is for sure is that investors are usually investors are very, very interested in tier 1 banking stocks, right? So we looked at the NPL ratio for June 2016 last year, and it was at about 11.7. Right? It then rose to 14% in December, right? And this was largely because of the FX challenges. Look at the case of Etisalat, right? And they defaulted on their loans, increased non-performing loans for the banks. But then, as at last time I checked, I think as at January, it's been moderating. It's currently at about 13%, right? So apart from the fact that the NPLs are starting to see an improvement in NPL ratios, like I said, investors, foreign investors, we've seen in the market since April, since the launch of the INE-FX window, they are more particular, they are more biased towards the banking stocks, right? And you see all the FX, they are more biased towards the banking stock. You see they make, and apart from that, you see they've always published recorded decent earnings over time. Most tier 1 banks, you know, people, investors will usually key into them for dividend expectations and all of that. So yeah, sentiments towards banking stocks are always, you know, bullish. And yeah, apart from that, you have the macroeconomic stability, improvements in fundamentals.
Now, the oil and gas sector, that sector seemed to have lagged behind with a year-to-date return of about 2.3%. That's still as at June 23rd. Now, is this a reaction to the instability, you know, in the crude oil prices, or are investors just reacting to the lack of investor-friendly policies in the oil and gas sector?
Okay, yes. The crude oil price is a major factor to look at for the oil and gas sector, right? Recently, you've seen the improvements in the oil volume production. You've also seen an improvement in the Four Quarters terminal is, you know, back up and running. So yes, the sector has suffered from militancy issues that we saw last year. Although, I mean, recently we've seen relatively stable oil prices, right? And the sector is now starting to improve, right? OPEC's deal also impacted the sector positively towards the end of last year, right? And for I think price of crude oil is currently about $47 per barrel. Improved production for investors. We looked at last week, right? When we saw a decline in price of oil. It was about 45. Saw some sell-offs at the oil market. So yes, I think because we know that most of the revenue that we make in Nigeria is from oil. So when you see like a little decline in price of oil, is sort of worries for
creates a kind of jitter.
Yes, but I mean, as far as the prices remain stable and production and then the militancy issue is curtailed, we don't see the
all right. Now, what are your broad expectations for the market looking into the second half of the year now?
Yeah, for the second half of the year, we still expect this bullish sentiment to continue, provided that this FX management that the CBN has been doing for a while now is continued, and then the improvements that we've seen in GDP, PMI, improvements that we've seen in inflation numbers, you know, all this macroeconomic fundamentals remain very largely stable. We expect to see by full year we should be in excess of 30% for the ASI. So yeah, definitely we expect to see this bullish sentiments continue for the rest of the year.
Talking about the improvement in the macroeconomic stability, the inflation rate, the FX stability, the GDP. Now, some analysts expect that the MPC may consider loosening monetary policy sometime in the second half of the year. Do you also expect to see that happen?
I think the MPC will most likely be focused on the big guy, which is FX. So you're looking at inflation, you're looking at GDP, you're looking at FX stability. Yes, all of these macroeconomic fundamentals have improved. But looking at inflation, is it improving at the pace? Is it moderating at the pace that you know that they will actually want? Yes, they're okay with the way. The main issue we still have is the farm produce, food inflation, which cannot be controlled by them. So, I mean, I think that's not their job right now. The job is the FX. They will most likely focus on FX for now.
All right, thank you very much, Adoyin. Let's just hope for the best. Thank you.